Remember those pre-pandemic days when a Zoom was just something race cars did,
Uh-huh, yeah.
and the most exciting part of your workday was trying to figure out which coworker brought the stale donuts?
Oh, man, I miss those days sometimes.
Well, buckle up, because today we're diving into the story of Zoom Video Communications.
It's a company that basically went from zero to hero, faced some pretty serious
Yeah,
scandals.
and now they're battling for survival in the whole remote work world.
Yeah, it's a wild ride, that's for sure. And it's got a bunch of good lessons for beginner investors.
Definitely. What's so fascinating about Zoom is that it kind of shows how unpredictable the stock market can be.
Right. It wasn't an overnight success.
Right.
Founded back in 2011, Zoom was quietly building its platform for years, just steadily growing, getting more users.
They even hit unicorn status, right?
Exactly, that billion-dollar valuation back in 2017.
So not exactly an underdog story,
Right.
but definitely proof that slow and steady can sometimes win the race. But then 2020 happened,
Hmm.
and Zoom became, well, Zoom.
It was like the whole world suddenly needed a way to work, learn, and hang out from home.
Right.
And Zoom was the tool that made it happen.
And their stock price, well, that went through the roof.
We're talking like a jump from around $68 a share in 2019 to a crazy peak of $568.34 in October 2020.
It was nuts.
Pure supply and demand.
Yeah, but with maybe a little too much investor hype thrown in?
Some might call it irrational exuberance.
Maybe. It's like they hit the jackpot but forgot to, check if anyone was watching.
Right.
Do you remember Zoom bombing?
Oh, yeah.
Uninvited guests crashing meetings?
Sometimes with, let's just say, not so professional content.
Yeah, that was a mess. All those security problems became a huge PR nightmare for Zoom.
They had to scramble to fix those vulnerabilities.
Yeah.
They even settled a lawsuit for like $85 million in 2021.
Ouch. But it's a good lesson for investors, though.
Hmm.
Even companies with crazy growth can have, well, skeletons in their closet.
You always got to do your due diligence. Right?
Absolutely. A realistic assessment of the risks is non-negotiable.
For sure.
And it's like a classic example of, what goes up must come down.
Hmm.
As the world started reopening,
Right.
people were craving, real face-to-face interaction.
Hmm.
So Zoom's growth naturally slowed down.
And the competition was ready. Companies like Microsoft Teams and Google Meet, they saw their chance.
They ramped up their game, right?
Exactly. They went hard after Zoom's market share.
And by November 2024, Zoom's stock price had tanked to $81.46.
It was a huge fall from grace. And it shows another important lesson for new investors. No company is an island. You got to understand who they're up against.
Absolutely. Right. So where does that leave Zoom today? Well, their 2023 revenue was $4.53 billion, a 3.1% increase from the year before.
It's not exactly the crazy growth they had during the pandemic,
No.
but it's still growth.
Which raises the question, right, is this a sign that Zoom's bouncing back? Or is it a warning sign?
It's tricky. Investors need to look past the headlines and see how a company's really doing compared to its industry and, its own past.
Yeah, in a competitive market, any growth at all could be a good sign.
Absolutely.
So we were talking about fixed and variable costs. Might seem boring, but it's actually super important for, figuring out if a company's in good shape financially.
Yeah, definitely. It's really not that complicated. Think about it like, imagine you've got a lemonade stand. Your fixed costs are things that stay the same no matter what, like the cost of your stand, your pitcher, stuff like that.
Okay, I get that.
Yeah.
But your variable costs, those go up with every glass you sell, right?
Sure.
Like the lemons and sugar and maybe those little umbrellas if you're feeling fancy.
Exactly. Now think of Zoom's platform as their lemonade stand. Their fixed costs are things like developing the software, marketing, data centers, all that. Big investments, but once they're made, adding one more user doesn't really cost much.
So the more users Zoom gets, the more they can spread those costs out, right? Which could lead to more profits.
Right. That's why companies, especially tech companies, want to be scalable, being able to grow without, costs going up too much. But growth doesn't always mean profit. Even with a scalable model, you got to have people paying for your product. That's what really matters.
Speaking of paying customers, let's talk about the competition. Microsoft Teams, Google Meet, they're both going after Zoom pretty hard, right? How do their business models compare?
Well, Microsoft and Google, they're doing things a little differently. They include their video conferencing stuff as part of bigger software packages, like Microsoft 365 or Google Workspace. So if a company's already using those, Teams or Meet is just right there.
Makes sense. It's like a built-in advantage. They don't even have to really try to get those users.
Right. It makes it harder for Zoom to compete on price. They have to keep coming up with new stuff, better features, a better experience overall if they want to stand out.
It's like trying to sell a GPS when everyone's got navigation on their phone already. You got to offer something really special.
Exactly. So let's look at Zoom's financials for a second. In 2023, they made $4.53 billion in revenue. But to put that in context, Microsoft's whole productivity and business segment, which includes Teams, made $69 billion.
Whoa, that's a huge difference. So even though Zoom's making billions, they're kind of in a smaller league compared to Microsoft.
For sure. But revenue isn't the whole story. Investors also care about profit. And actually, Zoom's doing better than Microsoft in that area. Zoom's operating margin in 2023 was 23.4%, while Microsoft's was 42% for that whole segment.
Wait, hold on. Operating margin. I'm not sure I got that one.
Oh, it just means like how much profit they make on each dollar of revenue after you take out the operating expenses, like salaries, marketing, all that. So basically, even though Microsoft's making way more money overall, Zoom's better at turning each dollar into profit.
Oh, okay. That's pretty impressive. Does that mean Zoom's a better investment, though?
Not necessarily. It's just one piece of the puzzle. There's a lot to think about when you're looking at investments. Revenue growth, market share, how much debt they have, what the future looks like for the company.
It's like trying to judge a book by its cover. Or I guess by just one chapter.
Right, exactly.
Yeah.
And speaking of the future, what's next for Zoom? What should investors be paying attention to?
Yeah. What are the big trends, the big challenges?
Well, one of the biggest things is what's going to happen with remote work? Is it here to stay? Or was it just a pandemic thing?
Yeah, that's the million-dollar question, right? If everyone goes back to the office, Zoom might be in trouble.
Exactly. They need people to keep working remotely, or at least, in a hybrid way for their business to keep doing well. And then there's AI, artificial intelligence. It's everywhere these days.
It really is. Self-driving cars, chatbots writing poems. It's crazy. What's AI doing to the whole video communication world?
It's going to change everything, probably. We're already seeing stuff like AI transcriptions, translations, noise cancellation built right into video calls.
That's pretty cool. Instead of trying to hear your coworker mumbling, you can just read what they're saying.
Exactly. AI can also look at all the data from meetings, give you insights, even do some tasks automatically. It makes virtual meetings way more efficient. So for investors, the question is, how is Zoom using AI and all this new tech to stay ahead of the game?
Yeah, it sounds like AI could be huge for Zoom. But are there any downsides? Like, what if AI gets so good that we don't even need to talk to each other anymore?
That's a good point, even if it's a little scary to think about. But really, it's more likely that AI will just help us communicate better, not replace us completely. The key for Zoom is to use AI in a way that still makes things feel human.
So it's about finding the right balance.
Exactly. Investors need to see if Zoom can do that, can keep evolving as technology changes.
Right. Well, we've covered a lot today, from fixed costs to AI and everything in between. It's clear that Zoom's story isn't over yet.
Not even close.
So what are your final thoughts on Zoom's future? Any key takeaways for new investors listening in?
Well, if you were thinking about investing in Zoom today, what would you do? Buy, sell, or hold? There's no easy answer. But here are a few things to keep in mind. First, Zoom's growth during the pandemic was amazing, but it's probably not going to happen again. Things have calmed down, and there's more competition now.
Right. And second, Zoom's business model, even though it's scalable, depends on people continuing to work remotely.
Yeah. And third, Zoom needs to keep innovating, figuring out how to work in different markets, and finding that balance between AI and the human touch if they want to succeed in the long run.
Investing is all about, weighing the risks and the rewards. Zoom's had its ups and downs, but it also has the potential to grow and do new things.
Do your research, look at all the info out there, and most importantly, trust your gut.
All right, welcome back to the final part of our deep dive into Zoom.
Yeah, we've been through a lot with them.
That pandemic boom, the security issues.
Right, and now they're going head-to-head with giants like Microsoft and Google.
It's been quite the ride.
Kind of like that time I tried to use a virtual background and accidentally turned myself into a potato.
Wait, you turned yourself into a potato?
Oh, it was a meeting I'll never forget.
Yeah.
But hey, it just goes to show, even with all this fancy technology, things can still go hilariously wrong.
Speaking of technology, we were talking about AI before the break.
Right.
It's pretty mind-blowing how AI could change virtual meetings,
Right.
make them more efficient, maybe even more fun. But what about the downsides? What if we become too reliant on AI and lose that human connection?
I think that's a really important question. Like, would you rather have a meeting led by a, charismatic person or a super efficient AI bot?
Honestly, as much as I love the idea of a bot taking perfect notes, I think I'd still prefer a human touch. We need that connection, those shared moments of laughter or understanding that you only get with real people.
Exactly. And investors need to think about that when they're looking at Zoom. Can they use AI to make their platform better without losing that human element that makes communication, meaningful?
It's like adding spice to a dish.
Right.
A little bit makes it better.
Yeah.
Too much, and you can't even taste the food anymore.
Perfect analogy. So Zoom's also trying to expand globally. They want to be big in markets all over the world. That could be a huge opportunity for them to grow.
But going international, that's not just about, like, translating your website, right?
No way. You have to understand different cultures, how they do business, what the rules are in different places. Zoom has to adapt, make their product and marketing work for all sorts of people.
It's like telling a joke that works in English to a group of people who only speak Mandarin.
Exactly. Investors need to look at whether Zoom can handle all that, successfully adapt to all these different cultures.
So we've covered a lot. Zoom's past, their present, what might be next for them. We talked about their business model, their competition, the technology that's changing their industry. But what does it all mean for beginner investors?
That's the big question. If you were thinking about investing in Zoom today, what would you do? Buy, sell, or hold?
No easy answer there, but here are some key things to consider. First, that incredible growth Zoom had during the pandemic, that's probably not coming back. The market's more stable now, and there's a lot more competition.
Right. And second, Zoom's business model, even though it's scalable, depends on people continuing to work remotely.
And third, Zoom needs to keep innovating, figure out how to work in different countries, and find that right balance between AI and human interaction if they want to succeed in the long term.
It all comes down to, research, look at all the information, and trust your gut.
Absolutely. Investing is about understanding the potential risks and the rewards. Zoom's definitely had some bumps in the road, but they've also got the potential to keep growing and innovating.
Yeah, it's a journey, not a sprint. There will be ups and downs, but if you stay informed and make smart choices, you can navigate this world of investing and reach your financial goals.
Well, that wraps up our deep dive into the world of Zoom. We hope you learned a thing or two and maybe even had a few laughs along the way.
Thanks for tuning in.
Then until next time, happy investing.